Turning now to the markets, and investors are balancing optimism over potential vaccines with concerns over renewed restrictions and reports of new clusters of COVID-19 around the world. They'll also be looking ahead to third quarter economic data from the United States. Well, France 24's business journalist Cole Stangler is keeping a close eye on it all for us, and we can speak to him now. Cole, you've been looking at the markets naturally enough this morning. What do you think investor sentiment is looking like as the week gets off?
Well, you really have two competing narratives that are going on right now. Investors are trying to make sense of. On the one hand, you have a hope and optimism over some of these recent vaccine developments. And just today, actually, AstraZeneca, the latest to announce a potential vaccine, early analysis showing it's effective up to 70% in protecting against the virus. So one of many vaccines that we have coming in the pipeline potentially. So that optimism about vaccines, but they're also managing that against some real short-term concerns. You have cases and you have ongoing economic problems associated with the virus in the short term. And so investors are trying to really juggle both of those two competing narratives. Today's really no different. We've been seeing that play out on the markets in the last few days and into this week. So starting with the European indexes here, the DAX over in Frankfurt's up around 0.4%. Gains as well on the FTSE. We're seeing the latest vaccine news from AstraZeneca propel some of those gains. Interestingly, though, AstraZeneca shares are actually down around 1%. That could be because investors maybe hoped that AstraZeneca vaccine news could be a little bit more positive. 70% effectiveness is a little bit lower than some of those other vaccine data we've seen coming out. We have some slightly bigger gains on the CAC 40 here. In Paris, Danone shares, in particular, up around 0.7%. That comes after the company announced that it's laying off up to 2,000 employees, including around 400 to 500 here in France as it tries to cut costs. So that's the picture on the European markets. Get you those Asian figures now. The Nikkei in Japan closed for holiday. Gains, though, on the Shanghai Composite. That we're seeing up just over 1%. The Kospi in Seoul also with some strong gains, but losses though on the Hang Seng in Hong Kong.
And of course, Japan closed, as you were saying. Cole, Singapore, meanwhile, has published new GDP data. It's not looking good, but apparently it's better than many feared.
Yeah, so this data shows that GDP fell 5.8% in the 3-month period from July to September, if you compare that to the same stretch last year. But yes, as you mentioned, prior estimates were for around a 7% year-to-year drop. So this is actually better than expectations. The other good news for the Singaporean economy is that it expects to have growth rebounding next year, anywhere between 4 to 6%. It's interesting because this is a country that's very heavily national trade and commerce, a small city-state, if you will, very sensitive to not just the health situation, but also the economic situation outside of its borders, the situation within its trading partners. And we just saw this weekend a sign maybe how fragile that recovery is in Singapore. Singapore and Hong Kong were supposed to open up a so-called air travel bubble between the two territories. That was supposed to happen on Sunday. It's now been delayed for 2 weeks because of an uptick in COVID cases in Hong Kong. So just a reminder of how fragile this recovery is. Things may be slowly getting back to normal, but we're really just not there yet.
Okay, Cole, for now. Thanks indeed for that. Cole Stangler there, one of our business journalists.